Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Cerrado Gold. Cerrado is traded on the TSX.V under the ticker CERT and on the OTCQX under the ticker CRDOF. And I'm joined today with the founder and CEO of Cerrado Gold, Mark Brennan. And Mark, it's always great getting you on the show. It's been a little while. It's high time for an update. I think it's been about 6 months since we've had you on the show, and you've got some big news. We obviously want to unpack in this one the merger of Cerrado Gold and Ascendant Resources, and that brings you up to three key projects in the portfolio. The gold producing project in Argentina, which we'll kick things off with. Obviously, this new critical minerals project coming in from Ascendant Resources. It has a polymetallic structure. And then your iron ore asset, Mont Sorcier, which we'll also touch on later today in this interview. So a lot to get into here. I want to kick things off, though, because we're in the backdrop of record high gold prices, well north of $3,000 now. I saw it at 3,100 on the futures pricing last night. So a great time to be a gold producer. Let's just kick things off with a quick update on Minera Don Nicolas in Argentina, your producing asset.
Yeah, thank you, Shad, and great to be back chatting after a little while. Obviously, we've been using the time expeditiously to make sure that we're very strong and building our growth story. And leading that charge is Minera Don Nicolas, as you mentioned, and gold prices at $3,100 makes life a lot easier and a lot better. You know, we're still on the same path that we've discussed in the past, where we're looking at a stable production rate currently at about 55,000 ounces over the course of the next 3 to 4 years. So we're very comfortable that for the first time in a long while, we have a very stable kind of management focus on just a plan that's in place that we published in the Q4 of 24 with the PA, and basically we're very comfortable with that program that we have. Obviously, that program will generate substantial cash according to the PA. For the 55,000 ounces at $2,100 gold, it should generate $25 million of free cash a year. At today's prices, we're probably closer to $35-40 million a year. So that's enabling us to not only really strengthen our balance sheet and put us in a strong financial position, but we're also growing. And we're just about to embark on an underground exploration at Minera Don Nicolas, and we're looking at that to significantly expand our exploration resources as well as our production. So we'll start the development of the underground actually in April. And then our expectation is that we should probably see first ore coming out of it as early as the third quarter. And the reason for that is we're just going to start a ramp down from the Paloma pit, where we have the sulfuro vein, which we mined for 2 to 3 years already. And basically what we're going to do is just go follow that vein and from the pit floor, which makes it a lot more rapid to develop. So we're going to see some additional ounces coming into our projections from the underground in 2025. But what is really most important is that we're going to drive our exploration underground. We'll be able to drill from underground, as we've mentioned in our press releases and our presentations. The sulfuro vein is open in all directions at depth. And as a consequence, we expect to see a pretty significant drill program, which will expand that resource underground as we move forward. The nice thing is that, historically, we've had about 8 to 10 gram production out of that pit. And we expect that from what we've seen underground, we're probably looking at 10 to 12 grams per ton. So it'll be highly economic, even though we're moving underground. And we're very excited by the prospects for it. On top of that, we're also looking to now be very aggressive in terms of looking at open pit opportunities. We've had some very successful surface exploration and development where we've taken smaller pits down to 50 meters. And then what we've done is we've actually lost the resource, and we haven't had the cash or capital to really drive big drill programs to find the continuity. And now what we're looking to do is to go and look at these areas where we've had very good success at surface and follow them to depth. So, we see ourselves at Minera Don Nicolas as very, very early in the process there. As you may recall, we bought this project during COVID. We had 2.5 years of COVID, which was a nightmare, with logistics and growth. Even though we did take our production up from 20,000 ounces up to 25,000 ounces. But, we think that from here, we're very comfortable to say to the market, listen, we've got 3 to 4 years of 55,000 ounces a year. as a minimum. That's going to generate a lot of cash at today's prices. But hey, watch this exploration train because it's going to be it's going to be pretty substantial in terms of dollars and meterage in terms of drilling. So from that perspective, we're pretty excited about the future of Minera Don Nicolas.
Well, and Mark, at Minera Don Nicolas, the other thing is that that's really high grade to be, 8 to 10 grams per ton for an open pit is one of the higher grade open pits on the planet, I'd say, because a lot of them are 1 gram or sub 1 gram. But the fact that you can go underground here as well as find other satellite pits just shows the growth potential. Maybe just highlight some nearby mines, how long they've been running. And when people look at Minera Don Nicolas and think, oh, it's a smaller production profile, I don't think that they're understanding the growth potential that you're just outlining there with exploration, but also how prolific this area is.
No, if you look at the evolution of the Desierto Massif, basically you had groups like Anglo who have been there since the 90s. And basically, since the 90s, they've produced about 8 million ounces. So from that regard, and that didn't start overnight. What they did is from 95 to 2005, they got up to about 1 million ounces. And then from about 2005 to 2010, that was when they really grew their total database. And they started like we did, first at open pit, then they did some heap leaching, which is obviously what we're doing now. And then they went underground. So we're following the same kind of formula and recipe that Anglo have used at Cerro Vanguardia. And we think it's going to yield some very substantive results. Likewise, you've had Newmont and previous to that Goldcorp running Cerro Negro, and they're now running at about 7 million, 6 million ounces of resources. And basically they've taken probably 15 years to get there. Our hope is that, we'll do it a little quicker, but at the same point, it just has to bear in mind, that these things take time. And then if you look directly adjacent to us on the east, we have Cerro Moro, which is now owned by Pan American, which was previously owned by Yamana. They're now looking at 2 or 3 million ounces. But again, they've been there for the last 15 years. So the fact of the matter is that, these assets take time to evolve and develop. And, as we sit right now, we're sitting at about 600,000 ounces. We're hoping that the new programs that we're going to bring in will bring in somewhere in the same type of region of resources. And again, this will just be a start to move forward. So, we have to be a little bit patient. We have been kind of delayed as a consequence of COVID, and then having gold at 1,700 made things a little tougher. But at $3,000, we're generating a lot of cash, and that's giving us an ability to really accelerate our growth profile.
Well, we'll definitely keep following along with the growth and the exploration on the ground and underground at the Minera Don Nicolas project in Argentina, and also just Argentina as a jurisdiction has been steadily improving the last couple of years. So a lot of things moving in the right direction there. Let's get into the big news here, though, which is really the acquisition of Ascendant Resources. You were kind of on the head of both companies and saw the rationale to bring these together under one roof. Now, Lagoa Salgada is really a polymetallic deposit, but it also has a lot of precious metals in there too. So for people that like the precious metal side, maybe speak to that, but then also talk about the critical mineral side and the rationale to bring Lagoa Salgada in Portugal into the fold.
Yeah, if you look at the component of the Lagoa Salgada, basically 36% of its production is actually precious metals. So that's silver and gold. And so from that perspective, in the foreseeable future, we will remain precious metals focused. And until we bring on further production in the future, these combined assets will have 62% of precious metals, and then we'll have 38% of critical metals. That's not unlike some of these major gold companies that are producing lots of copper these days. So we are still very precious metal focused. However, we also see the value and the opportunity for critical metals going forward.
Well, let's talk about the critical metals that are in here. You've got kind of a nice mix. You've got the silver and gold, but you've got zinc, you've got copper, you've got tin. Talk to us about what the main value drivers are, and does that give you any optionality as far as permitting and government funding because of the critical mineral side of things?
Indeed. I mean, first of all, this project, to outline the project that we now have as it sits today, we've got a 14-year mine life on a project that's going to throw off 75 million a year for the first 5 years. And then the objective was to look to expand it. What we've done now is we've kind of taken it and we've shaken it up a little bit to turn it into, to optimize the feasibility study So we'll probably look to reduce the mine life to 10, 11 years, so marginally, but at the same point, looking to throw off a lot more cash flow, closer to $100 million in the first few years, and then have still very strong cash flows falling for the balance of the 5 years. But in terms of the project itself, so it'll be very, very robust. It'll be a low cost. If we use zinc equivalent costing, basically it'll be one of the lowest cost producers of zinc around. 79 cents a pound for the life of mine, 59 cents for the first 5 years. So it's a very robust project as it sits today, without our optimization. But to your point, with the demand and the strategic requirement for critical minerals, we think this is going to gain even more traction and become a lot more valuable. I'll also focus on the fact that we see this as having the potential to be a world-class asset in terms of size. We've only done 40,000 meters of drilling here, exploration drilling, and basically we've come up with 27 million tons of resource. If you look at Neves Corvo, which is the old Lundin, and now the Boliden project, they've done about 1.6 million meters of drilling, and they're running about 150 to 200 million tons. We believe very strongly that based on the geophysics, the IP surveys we've done, the gravity surveys that we've done, we think very strongly that this asset can have to go up to that 150 million to 200 million tons. So we do think it has the capability to be a world-class project. But to your point on strategic and critical minerals, this project is a PIN project in Portugal. This is a project of national interest. They're using us as a bellwether for attracting other mining activity in Portugal on the pyrite belt for these critical minerals. The European community, we have a program called the Undercover Program starting in April, where we're using some of the top geophysics companies in the world to go undercover, i.e., look at projects that are deeper in terms of their depth, and basically looking at new resources for those. And initially, this budget has about 5 million euros. There are 3 projects where we were going to get about 1 million euros of that. Now we're going to end up getting about 3 million euros of that 5 million budget. So I think people are really seeing the strategic benefit of critical minerals. The European community really want to have their own source of supply. And so that'll really kick in as we move forward. But first and foremost, what we see here of value is a project that in its own right has very, very robust, strong economics, low cost producer, and with world-class potential to grow. All the ancillary benefits of being critical minerally orientated is more gravy on top.
Yeah, it's a nice kicker to have, but the project makes sense just in its own right. Now, let's go through like the brief timeline of what you think is going to happen as far as catalyst. You already have a feasibility study, but I understand that you're going to be updating that feasibility study later this year. Talk to us about permitting, talk to us about the path forward, and when could you make a construction decision on a project like this?
Sure. So basically, we actually expect in the next 2 weeks to receive our initial permit, the environmental impact assessment approval. And then that would lead to 6 months where we would look to get our construction permit. In the interim, to your point, we expect to see an updated, optimized feasibility study, let's call it in July. Our expectation there, as we put in press releases, is that we're kind of targeting to see a very, very robust project, probably looking at about 175 million of NPV with about 150 million of capital costs, which again, we're funding. We've got very strong support for funding. And so basically, we're expecting a construction decision in November, and we expect to be, putting our shovels in the ground in the first quarter of 2026. So if you look at the benefit that this asset is going to bring to Cerrado and its shareholders and its own shareholders, I think that this is a really good win-win for both parties, shareholders of Ascendant as well as Cerrado.
Well, Mark, if we kind of pan back to the master plan here for the company, you're growing the gold production and using exploration to grow the project mine life and the resources and possibly the production profile in Argentina. All of that revenue you can kind of plow into helping with the development of Lagoa Salgada in Portugal. And then when you get that up and running, you have a third asset, and we don't give it a lot of airtime, but I think maybe we should this time, and that's the Mont Sorcier project. It's an iron project in Quebec, but you were kind of saying that that's one of the jewels of the portfolio that often gets overlooked. It's clearly not in your valuation right now, but a lot of people hear iron and think, I'm not interested in that. But maybe talk to people why they should be interested in the value proposition of Mont Sorcier.
Well, to your point, I mean, our focus here is on driving cash flow. we're looking for, again, projects that are low cost, have potential to grow substantially. And the most important thing for us is driving cash flow. And so if we look at how and we want to do this without dilution. So to your point, we're looking at Argentina to help us build the Lagoa Salgada in Portugal from Ascendant with very limited, if no equity contribution at all. And then we're looking at potentially these two assets looking to help us build Mont Sorcier in Quebec. Now, Mont Sorcier in Quebec it's the equivalent of about 300,000 ounces of gold. It's a very, very significant project with what we think is a limited capital budget for an iron ore project that basically will become an annuity generating lots and lots of cash, 350 million of cash flow, 250 million of free cash flow, according to the PA that we completed in 21, on the basis that we think we can use Lagoa Salgada cash flows to actually build that project, again, without diluting our shareholders. So from that perspective, looking at Mont Sorcier, this is a project in Chibougamau, Quebec, a well-known, well-established mining camp. We're about 15 kilometers outside of town. We're about 25 kilometers from a railhead. That railhead will go 300 kilometers down to the port of Saguenay. It's a deep water port, no clients at the moment. We've signed a letter of intent with them. The federal government and the provincial government are spending about $200 million to upgrade the port and to make it a first-class port, deep water, all-year port. So what we're looking at is we've got an iron ore project, open pit, 1 billion tons. We can produce 5 million tons per annum at a cost of $45 per ton. We can sell that material, we believe, comfortably at $100 current pricing, plus probably a 25% premium on top of that because of the premium product that we have. So again, it's a project that we're very comfortable operating. It's an easy project, open pit, less than 1-to-1 strip ratio in the first few years. And the reality is that we also have very strong support and funding, as we do in Portugal, from the UK government to build the project. They'll provide us with 70% of the capital requirements that we require. On top of that, we've got Sprott in Portugal. We're very comfortable we can get an offtake and a stream on our project in Quebec. So the reality is that this is a world-class project. It is a jewel. It's a project that the iron ore business people tend to yawn at a little bit because it's only growing at 1 to 2% per annum. However, if you look at the high purity, high grade iron ore, that business is growing at 9 to 10% per annum. And the fact of the matter is it's what all producers are going to want and need in their production of iron ore and steel for the blast furnaces. So, we think as we move that closer to the production, that basically we're going to get a lot more attention. We will complete a feasibility study on that project. We're in the middle of it now. We'll complete that feasibility by the end of the first quarter of 2026. And I think when people start to see the level of detail, the benefits and the economic robustness of the project, I think we're going to see a lot more attention coming to Cerrado as a consequence. That said, we still see lots and lots of scope for growth, both at MDN, Minera Don Nicolas in Argentina, as well as Lagoa Salgada in Portugal. So we think we've got 3 very, very robust projects that each in their own right have the ability to be world-class in terms of size and cost. But, the story will unfold as we move forward. And the nice thing is that we have a very strong financial position to drive these projects with limited, if no dilution at all.
Well, and I think that's the key takeaway here, Mark, is that you got 3 projects, 3 jurisdictions, you're diversified across different metals, but you're also in the lower quartile as far as cost, and you have all of these relationships on the debt side and credit side to be able to help fund these projects, like you're saying with the UK Export Credit Agency and with Sprott. You've got some partners in place, so you can kind of see the vision of how this is all going to come together. Let's talk about the financial strength of the company now. When we talked last time, we were talking about the divestment of the Brazil asset, but it's kind of set you up for your current situation where you're a lot stronger company. And then also with the gold prices as they are, just from Argentina, the production mix there is going to fund, the initial growth. So talk about the financial health of Cerrado and where things are going.
Sure. In the last 6 to 9 months, we've focused on building our financial strength. And, I think a year ago, we probably were looking at debt combined of about $70 million. Our expectations will be leaving this year with 2025 with probably 10 million of debt and probably, a negative debt to cash position. So, again, we'll be generating at least 25 million of free cash out of Argentina. And from that perspective, we're spending probably $15 million, $5 million on bringing Portugal to the production decision and construction decision. We'll spend 10 million on the feasibility in Quebec. But irrespective of that, we expect that we'll end the year around that 20 to 25 million in cash, on top of the 15 million that we're still owed by Hochschild. And that puts us in pretty much the same position we are today. However, our debt again will be substantially reduced. We're expecting about 10 million of debt on the balance sheet by the end of the year, which is a substantial reduction to what we've seen over the course of 23 and 24.
Well, Mark, as we wrap up, just give us, we've talked about a lot here. There's a lot of projects, there's a lot of moving parts, but what are the key news, catalysts, and milestones that you really want people focused on just to kind of congeal everything we just talked about over the course of 2025?
Well, I think first, again, you'll see the permit for Portugal coming through in the next couple of weeks. We have the shareholder vote on May 6th and the closing for the acquisition of Ascendant very shortly thereafter. We'll have a new feasibility study, optimized feasibility study for Portugal by July. November, we'll have a construction decision. We'll start having our shovels in the ground in the first quarter of 26. That's in tandem with the completion of the feasibility study for Quebec. And while that's happening, we'll be underground this summer in Argentina, and we'll be very aggressively drilling in Argentina to dramatically expand our resource over the course of these next 6 months or so. So that'll be more sporadic in terms of timing as we achieve results. But we've got a very, very exciting 9 months ahead of us.
Well, it sounds like a lot of news flow on tap from all three projects, so we'll definitely keep following along with it here at the KE Report. And for people listening in, if you want to follow along, definitely click on the link in the show notes over to the Cerrado Gold website. Takes you right to their news section where you can sign up for updates or just follow along with the news flow as it hits the markets. Mark, it was great getting an update on all three projects and on Cerrado Gold. And as always, looking forward to our next conversation.
Likewise, Shad, and thank you very much. Great, really appreciate your support.